Be right back. Got to coffee up. All right, you guys ready to go? Who's alive? I just had to get my mommy fuel. All right, what are you trading? Please complete the form. All right, well, I suppose it's time to get on with it. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Ni hao ma. Look at me. Hey, I didn't sleep much. But anyways, I got my mommy fuel. That's all that matters. Yeah. So, yeah, lots going on in the world. We have a new war. And then, oh yeah, we have CPI later this week. So anyways, lots going on. It's week 41. Yeah, week 41. If you're a subscriber to QuantBox, you know exactly what that is. But anywho, so what are we going to do today? I suggest we go through our charts. How about that? You want to do some technical analysis today? That seems good. So ask questions, get involved. Please click the like button. Do the whole thumbs up thing. Tell YouTube this is quality content. I'm here to serve. I'm your humble servant. I will share my 20 years of trading experience by giving you feedback or ideas or guidance, if you will, on this journey we call Forex. Just let me know how I can help and I will serve. There are various resources I'd like to point you towards. The links are in the description below. One of them is tradersway.com, a trustworthy and ethical foreign exchange broker that doesn't trade against you. They don't B-book you and trade against you. They're an ECN, which just means when you enter a trade, they put it into the interbanking system. No tomfoolery. Yeah. Other brokers will trade against you. They think you're stupid. They think you're going to lose all your money. So why would they enter that into an interbanking system? Why wouldn't they just trade against you, keep all your cash? That's what most brokers do. Trader's Way is different from most brokers. Okay? ECN, straight through processing. They provide you a service. They're a service provider. I recommend you open up a demo account. Check them out. See if they can earn your loyalty and respect. I'd like to point you toward Investor Bootcamp. Investor Bootcamp, and we are in the process of teaching you how to trade everything. Anything and everything. Right now, on Wednesdays, we are doing a stock trading course. Yeah. A stock trading course. Pretty good. People are learning things like, well, I'm going to cover in the one on Wednesday, we're going to do some beta. We're going to add beta. We've already done sigma, and you've learned signs like epsilon. Yeah, whoa. Picking stock is mathy? Yeah, in the beginning, but you have to understand things like, variance and standard deviation and how to do the calculations. You have to be able to calculate expected return of a stock. So anyway, we've done expected returns, we've done variance, we've done standard deviation. You understand what some, okay, the epsilon. You gotta square that down, right? And then we're gonna add this new thing called beta on Wednesday. So this is pretty cool. It's really cool. It's heavy math, but you don't have to be mathy. I just want to show you how we get to the conclusions we get to so that you can pick the best stock. So we do things like stock A, stock B, stock C. Which one's best? Well, let's crank out the math. Oh my goodness. So anyways, you might want to swing by there. First thing you need to do is join. It's $88 a year. Cool. You want something free, totally free? Totally free. Not only can you see what AI is thinking, but every so often I've been reviewing people's trade plans and posting it on YouTube. So you're going to get feedback from me, Wayne, and you can get feedback from Aiden, our AI. QuantBox. Okay. Automate your macroeconomic research. Very cool. Okay. Catalin says, can we get a look at seasonality on Euro Pound? Sure. Just go to quantbox.co, put in a credit card, and it'll show it to you. Hang on, my phone is going ape crazy. Lots going on in the world. Everybody's busy. Busy, busy, busy. Sweet. All right, so we have a war going on in the Middle East. It started Saturday, and it's late Monday there. It's, what is it, 5 or 6 p.m. now? In Israel. Israel has declared war on Palestine. Palestine coordinated a huge attack early Saturday morning. Yep. And so now we do have a new war. And, well, I made sure I was at my charts when the markets opened on Sunday. One of the things I'm worried about is tension in the Middle East increasing. I know Israel doesn't export oil. Palestine doesn't export oil. So why would I care about oil? Well, if this does spread throughout the Middle East, Saudi Arabia, Iran, Iraq, okay? There are many exporting nations in the vicinity. And, you know, politics are definitely involved in war. So all kinds of things could make this new war spread into regions that do export oil. So, I am prepared. So I'm long oil right now and not doing particularly good nor bad. But the thing is, if it does spread, oil could go up very significantly. It's part of my contingency plan for such situations. So on Sunday night when the markets opened, I wasn't home, but I knew I wouldn't be home, so I brought my laptop, and I was sitting there in Starbucks as the markets opened with my laptop. And okay, on it. On it like stink on a whatever stinks. Stink like, on it like stink on a skunk. Just, right? Me and a hot blonde. That's a coffee, by the way. So anyways, boom. So we'll see, is anything happening? Another one that I'm interested in is, well, for actually quite different reasons. I'm long the stock market. This is week 41. It's not that I've counted all the weeks and know that this is week 41. I've been tracking seasonality. Not just monthly, but bi-weekly. Not bi-weekly, every week. So I have QuantBox Pro now offers weekly seasonality. So you might know that October is an up month, but what week should you get long? Well, QuantBox Pro answers that question for you. And so nonetheless, I'm long, but this war gets in the way of a pretty little plan. Okay, so anyways, What do you guys think of this trade plan? All else being equal, meaning if there wasn't an exogenous shock, this would be reasonable, huh? Yeah. It's all right, big fella. I'm prepared for that. Although this idea of like crash, okay, well, whatever. Like, how could you not know and how could you not be prepared? It's not that it will happen. I would say 30% chance that of a significant pullback in the stock market because of these risks. Sure. But none of it would be a surprise. It's a probability. So where's my stock trading? Lecture 2, risk and reward final. Let me show you some of the stuff that we are covering in the stock trading course. But I suppose before that, I should get you a link. Do I even have a link? Do I even have a sign-up link? Come on, Wayne. Hang on. I guess where would I get this link in Master Bootcamp? I'll log in. I guess I can show you what I'm doing. Wow. 2 trailer park girls around the outside, around the outside, around the outside. Mastermind, CIA. There. It's not even here. I don't even have it. Day trading video. I don't even have it up there. It's so funny. Wayne, what are you doing? What is it that you do all day, Wayne? I don't even have it up here. Huh. All right, so where am I going to get this link for you to join the stock trading course? Unbelievable. Is it that checkout? No. How funny. All right. Yeah, here it is. Here it is. All right. I'll provide this link just in case. How terrible. I haven't emailed. Have I emailed anybody? Big fella says this is the big one. Well, 30% decline is not a big one. That's a normal one. Anyways, let me show you. So who was it? Oh, big fella said, get ready for a big crash. Okay, yeah, sure. You should be ready. But I'll show you like the type of math that we get into. That's just a quick thing on. I want to show you the process of how you should be thinking about this, which is a little bit, it's the same of what big fella is saying, but without like the panic. Yeah. So let me back up a little bit. No, I'll have to do it. Well, maybe, hang on. Let me get back to this. Okay, I want you to think about this. And that's not actually a great example either. What am I trying to get to? Maybe we do it. I guess this was a good one. Hang on. Let me find a different version. No, I'll go back. This is, I guess I have to actually show it. That's what I need to do. Show current slide. Okay. All right, yeah, this is how you want it. This is why I couldn't find it, because I want to think about this. This is how you want to think about a big fella and everybody else. This is why you should be prepared. You should analyze the facts about the economy. This is your economic analysis. This is how QuantBox could help. This is, you could pay attention to what the Fed is saying, but you should be able to look at the markets. Now, we may agree or disagree, but through your own research and biases, you decide what's the chances of 2024 being a boom year, What's the chances next year is just sort of a normal, okay, flat to slightly up year? And then what are the chances that next year is flat out recession? So big fella would probably put this down more like 60, 30, 10 through his analysis. And so what you do is you pick your probabilities of the state of the economy next year. And then do analysis of how investment opportunities vary. So, right, expected return for stock A and expected return for stock B. Okay, so you're looking at these investment opportunities and you do some research and you find out how they perform in recession years, how do they perform in normal years, how do they perform in boom years, and that's your expected return calculations. But you can get there any way. You can just guess. It could be your feeling. Okay, but nonetheless, you want to look at your expected returns in different market conditions, and then what's the probability of each market condition. So if you feel like big fella says, oh yeah, we're going to have a big crash. Okay, cool. I'm not saying that's not possible. Not possible. I think I think there's a decent chance we could have a recessionary state of economy, and therefore I would have to make different investment decisions that I've made so far. I'd have to adjust my portfolio and have it more focused on, right, on what I think is becoming more and more realistic. So if there's going to be a crash, cool. Now, there's a decent chance of a significant pullback, and I'm already prepared, but I would still want to adjust to take advantage of that situation a little more proactively than I am right now. And you just have to do stuff like this. So anyways, that's a lot of math, but I'll show you what I care about is not that you can do the math, but you understand the math is being done, and that math comes, produces an outcome, and that you understand the outcome and you know how to use the outcome to make an investment decision. Okay? Yeah, no, like I'm saying, big fella, I'm not disagreeing. I think it's a decent possibility or probability. And if it happens, I'll make my adjustments and I'm fine. Yeah, but okay. Okay, cool. So if that happens, fella, I got it. I get it. I got it. I know it's good. My rhymes are tight. You wish you could. Yeah, sure. Is it happening now, though? No. You see what I mean? It's not like take it as it comes. I understand. I've assigned a lower probability of a scenario like that. Right now, I price in a different probability matrix than what you have. And right now, I'm using technical analysis. So, and I'm also using fundamental analysis. So I know that the next 9 weeks, okay, have a higher probability of being good. I think we're near end of rate cycle. Okay, stuff like that. So I have some seasonality, I have some fundamental analysis and monetary policy and all that. And now I have a double bottom, higher high, and my job right now is this. Right? Yeah. So I get you, but I can look at this and say, well, that ain't happening now. And it fits my current narrative of, this is the right time of year and the right reason for it to go up. Now, I have threats to this. The two biggest threats as of today is that recession, recession, which you point out, which would lead to a stock crash. So if that happens, I got it, man. I got it. I'll be on that like stink on a pig, which is great because I said it earlier, I'd be stink on a skunk. So stinky piggy skunk, okay? The other thing is this new war, yet another war. Okay? And that could kill anything that might be still okay in the economy. I gotcha. Then I'll do that. So I'm prepared, mathematically as well as emotionally. Cool. The thing is to be open-minded, like be absolutely certain what you intend to do now, but be very open-minded to being wrong so that you're always trading reality. Strong opinion, weak conviction. I know exactly what I intend to do today and the rest of this week, but I'm not going to put pride on it. And I'm certainly not going to lose a lot of money if I'm wrong. Now, if I'm right, I'll make money. A lot of money? No, because returns are a function of risk, and I don't take a lot of risk. So I will do my job, and I will make money. And if I'm wrong, I will not lose a lot of money. That's the whole game. All right? That's the whole game. All right. Thank you for voting, by the way. I appreciate that. Let's take a look and see what's on your mind. I clicked end pull. Is it going to end or what? Boom, took forever. All right, you're trading mostly dollar, which is pretty decent in a risk-off exogenous shock scenario. And then some of you are trading some gold, which is fine. Notice though, after the gap, so like on Friday we were here, and then Sunday we were here. So we're still in the gap box, and we haven't filled the gap. Typically what you do on gaps, what I teach you is that nature abhors a vacuum. So that, you should look for something that looks like this. So I have two trade plans right now. I was in one earlier. I got out at break even. I put another one. Plan A is kick it off the hourly 21. Okay, so I'll label that plan A. My plan B is to buy it off the Friday, peak. So close the gap, continue mission. Okay. That's out of our training course, by the way, at Investor Bootcamp. So if you don't know these things, you should pay the $88 and know these things. Okay, so nature abhors a vacuum. You fill the gap, you fill the vacuum, and then you continue mission. That's going to be my plan B because I'm a little more aggressive because I don't feel this is just technical analysis. Okay, but I have to be ready for both scenarios. Actually, Catalin, they're not short, so thank you for bringing that in. Institutional investors are still predominantly long, but there's been a shift from there are less bulls and more bears. Less bulls doesn't mean they're institutionally short, but there are less bulls and there are more bears, but institutionals are still long. Okay? But there's been a relative change. Correct. It's more bearish than it was 3-4 weeks ago. Yes. But institutional investors are not short. Now, if you have, if you share your proof, I can share my proof. So if you're like, well, look at this. But if some other YouTube guru said it, that would be incorrect. But I went over it this morning, like I know. I looked at the positioning. They're long. 70%, if I remember, are long. It just used to be 80%. Okay. So anyway, so I'm going to give some tries, but remember, this isn't fundamental. Like I say, is it Catalan? It might be Caitlin. C3 looking to long here is not a fundamental decision. I want to make that clear. It's a response to the war in the Middle East. I spent, the whole weekend watching it live. So I'm trying to get into a position just for that. It's like a hedge, if you will. I'm waiting to hedge. I know this time of year, and I know by watching institutional positioning that it is right to be a bear on gold right now. That's normal, but this exogenous shock is abnormal, and I need, like many other people, I probably need to hedge that, and I'm waiting to hedge. It's not like it's not a fundamental trade. It's it's an exogenous hedge. Okay. So Richard says gold doesn't pay a yield, but once again, now you're thinking fundamentally. This is just an anti-war hedge. This is a war hedge. This is a risk hedge. It's not like, oh well, it doesn't pay a yield. I'd rather get a 2-year note. No. This is regarding the war. Okay, so anyways. And the war is not good for the stock market, so I'm very, very, very concerned about the S&P 500 today. So, yeah. Okay. Now, the other thing, and I think I covered it, I'm long oil. And I was long oil at this price earlier. So let me tell you what I covered yesterday. See, the day trading group meets on Sundays. So when the market opened, or when we gathered around at 7 p.m. yesterday on Sunday, I was long at this price. Okay, and it went up for a little bit, and then it collapsed down to the moving averages. I got out at break even. Two different trades. So I was playing it aggressively as I could, just in case I wake up and we're up here. But instead, no, it came back to the moving averages, so there wasn't widespread panic. Cool. So it came down to the moving averages and popped up again. So I'm in again at the same price. And right now, there doesn't seem to be widespread panic. Okay. So I'll need to make some adjustments throughout the day. But anything in this war, because remember, war is hell. And things can go from bad to horrible very quickly. And in particular, as other players, Iran, the United States, Israel, Iraq, I don't know. There's a lot that can go wrong and very little that can go right. And if this spreads, to oil exporting nations. And it's, I mean, like the biggest risk is Iran. So if this spreads, the oil could very quickly go to $100 a barrel. And if it becomes like the worst case scenarios, $200 a barrel. Like, I'm not being like a fear monger. I'm just like, it's within the realm of possibility. So, using math like I'm teaching in the stock trading course, what's the probability of no big deal? Okay, let's say 20%, no big deal. Okay, big deal. And horribly bad deal. Okay. And as I assign these probabilities, I can start calculating my expected return for oil. And no big deal, I still think up, because I think there's a shortage of oil. And that this move here has to do with recession fears. The next thing is, well, if it is a big deal, so there's a lot of rhetoric between the United States and Iran, and and CNN starts talking about potential threats against Saudi Arabia, by Iran because of the United States' response, blah, blah, blah. But it's just rhetoric. It can become a big deal very quickly. And now there's two forces that are like to push oil up. And then 3, let's just put it this way. Joe Biden says something stupid. Hey, it could happen. And Saudi Arabia responds by sending in drones to attack a Saudi Arabian facility as a response to the stupid comments. And now we have game on, worst case scenario. And yeah, so now your outcome would be like oil goes to 90, oil goes to 111, oil goes to 150. Now you can calculate your expected return. Are you guys following me? Now you got enough math. There's a 20% chance oil goes to 90. There's a 70% chance oil goes to 111, or whatever you think. You have to do that, right? And then there's a 10% chance oil goes to 150. And I think it's not likely we go to 65. But you can adjust these things. You can adjust your numbers based on your own research. But you can come up with an actual number. What is the value of oil? Okay, 20% of the value of 90 plus 70% chance of the 111. You following? Is this cool? Or are you enjoying this, or you just want me to do some MACD analysis? Yeah. Cool. So now you have to, you see these, you can actually do these calculations. Does anyone have a calculator? This is awesome. Thank you. I mean, I love it. I like hanging with you guys. You're cool people. Most people just get lost. Okay, 0.2 times 90. Wait. Is that right? Yeah, 18. Hang on. 18 plus, clear, 0.7 times 111. And these are numbers that I made up. This isn't God's truth. You can have your own variables. And that's the job. What do you think? So I'll say 78. It's 77.7. Okay, plus 10% chance of $150 a barrel oil. So that's 15. So my expected return for WTI is equal to, okay, all of this gobbledygook, which is equal to 15 plus 78 plus 18. Oh my God, it came out exactly 111. Anyways, that's funny. I didn't mean it. I just made up these numbers. So anyways, there you go. So if I can buy oil at 86, and I've mathematically looked at all possibilities, I can come up with oil, my expected return for oil is 111. Should I buy it at 86? Now, where I could be wrong, obviously, are my probabilities and my expectations. So you need to do your own research, right? And so I just made all this up gobbledygook. But this would be my opinion. Okay? And then this, this could be opinion, but you can make your opinion based on research. But this could be a fun exercise for you. And you say, well, what do you think is going to happen? I like the idea that you're thinking about what might happen. Burns says, don't give away the oil trading course for free, Wayne. Yeah, I guess so, right? Yeah. So by the way, guys, $88 gets you into boot camp. Now, the stock trading course, there's a fee for it, as you've seen. But like Burns says, there's a stock trading course, which is amazing. Well, that's included with your $88, yeah. But I hope you're thinking about this. I hope you're thinking about this. So, because you can get a YouTube guru that says they think oil's going to go up, so they start buying it. And then if you ask any intelligent questions, you probably get no real answer. And they probably don't break it down logically like this. How many people like the fact that this is logical? It may be incorrect because it's still based on opinion, but it's not just like my gut tells me it's going up. That you can actually do a mathematical process so that you're actually making an intelligent decision. How many people want to work this way? Like, how about this? We could change it. What if I managed your money for you? And over the weekend, you give me a call and you're like, oh my God, Wayne, Israel's been attacked by thousands of Palestinians. And now Israel's responding with war. Like, oh my God, what do you think on oil? And I'm like, oh, I'm on it. Let me show you. Okay, when looking at like it's no big deal, it's a big deal, or it's a horribly big deal, I've made some quick calculations here, and I've calculated my expected return on oil. So here's what we're going to try to do. We're going to try to buy the dip. Okay? Oil is undervalued. Well, you can say it that way, but my expected return, right? I expect oil to go to 111. Now, ultimately, is it going to go to 111? No, but I'm incorporating various scenarios. Now, you can have you can break these scenarios down into 5 different scenarios, and all that kind of stuff. But I'm trying to teach you how to be smart with your money. Not just you're a good trader. I want you to know finance. Do you know finance? I have a master's degree in financial management. So this is the way I want you to think. So I'm going to try to teach you to think this way. And you might say, well, oil's just going to go up. Okay, good. Why? And you say, well, you calculated the expected return of the asset. Okay. Or you might say, you might attack it from an economics. See, that's finance. So I have a degree in economics too. Okay. And what you would do is you would say, okay, this is, we'll call it just the oil market. Oil market. Okay? This is the price of oil. This is the quantity of oil globally. Okay? This is a demand curve. Okay? And this is a supply curve. Equilibrium quantity, Q1. Equilibrium price, price 1. Okay, so now you're going to tackle this problem from an economics point of view. And you say, well, if this scenario expands beyond Israel and into the Middle East proper, in particular oil exporting nations, then there is a threat that supplies fall. There's a threat of it. So that's Q2. See, Q2 is smaller than Q1. Quantity, less quantity. So what happens to the price? You go from P1 to P2. Price has gone up. So you might start from economics and say, oh God, there's a possibility oil prices go up because of this exogenous shock. And then you start doing finance, doing your financial calculations to determine what your expected return of WTI would be. And that's where you do your probabilities now. Okay? So you can do good, for example, flat, for example, and bad. Okay? Think about what you believe the possibilities are. Do some research. Where did oil go when Russia attacked the Ukraine? That's the closest analogous scenario in recent history. How did the markets behave then? Is it likely, is it a direct relation? No, because Russia is an oil producing country. Embargoes will impact oil supply. Okay, but what if this expands beyond Israel into oil exporting countries like OPEC? Oh, okay, that's a bad case scenario. What's the likelihood Saudi Arabia or Iran get involved, or OPEC in general? Oh, so you might have contingency plans for that. What do you think the probability is? Is it definitely going to happen or not likely? You might disagree with me. And then you change your percentages. So I might say 10, 70, 20. Okay. And you might say 20, 50, 30. Okay. Okay, cool. Well, this is your expected return. My point is that you're not only beautiful and generous and hardworking and thoughtful and caring, but you're also smart. Yeah. What do you think? It's good, right? No, it does not, Richard. Okay. Yeah. It does cost money, Richard. It's not a lot, honestly. So my assistant on this project is about to get his PhD in economics, and so he's my assistant. And so basically all the money you pay goes to him. Like, that's it. So am I doing the stock trading course so that I can lease a Lamborghini and do some Instagram photos so that people love me? No, I have to pay my PhD money for his time. So your money goes to him, and I donate my time and expertise, and it all goes into boot camp. Yeah. Yeah, it's pretty simple. Money in, money out. Ooh. Oh, look how close I got to my order. No! Wow, that better not be the bottom. Cool, cool, cool. Is anybody going to join us? Yeah, you too, Grace. Happy Aboriginal Day. No, or is it? No, I'm not supposed to say Aboriginal anymore. Anyways, happy Thanksgiving. Yeah, no. There was indigenous people. It was nations, First Nations. I don't live in Canada, so I don't keep up very well. Yeah, I don't know. I guess I'm an old man, but when I went to school, most of my friends were Indians. Yeah, but I'm not allowed to say Indians anymore. But but they at the time referred to themselves as Indians. So, but most of my friends were Cree and Blackfoot. One was a Ojibwawan, but they're not from the prairies. They were a Ojibwawan are from Ontario, but nonetheless. Yeah. I'm not saying it's wrong. I'm just saying I don't know. Right. I respect, I mean, I respect my friends and their culture. Yeah. And I'm a kid that, I've had pemmican And anyways, yeah. So happy Thanksgiving. So the stock market's opening today, right? Yeah. By the way, is it Caitlin? Is it Catlin? Is it how do I pronounce it? I think I say cat. I used to say Catalin because we had someone in boot camp, I don't know, 15 years ago with a similar name, and I used to call him Kitty Cat. Yeah, well, that's interesting because we used to have a boot camper who was a DJ in Dubai, and that was one of my, one of my small regrets. I was in Dubai. This was, it was 10 years ago or something. I can't even remember. But I'm in Dubai. I did a speaking engagement, and I met with some boot campers. And he's like, "Oh, dude, I'm spinning at the like Louis Vuitton hotel in the Burj Khalifa. Do you want to come?" And I'm like, "Oh my God, yes! I'm totally there. I want to party with you, the DJ, at the Louis Vuitton hotel in Burj Khalifa." And this was when the Burj was brand new, right? Like absolutely brand new. I'm like, "Heck yeah." So he's like, "Great, it's tomorrow night at, swing on by like 11 p.m. or something." Like, sweet. I'm there, bro. And then later that night, because the party was the next night. Later that night after my boot camper meeting, I had some other meetings with clients. And so anyways, I go out with this client / friend of mine that I've known for a while. And he's like, "Oh yeah, let's go to the Palm." Right? I'm like, "Yeah, sweet." So he picks me up in his brand new Porsche. I'm like, "Oh, it's so nice." Yeah, and he's like, "Let's go to the Palm." So we go to the Palm. We have dinner at the Palm or something like that. I mean, anyways, and then they have a hookah bar at the Palm. Dude, I got so sick. Oh my God. I don't know if they cleaned those hookahs. I got like nearly died, that level of sickness from some sort of food poisoning, bacteria poisoner. I don't think they ever clean those things. I don't know. But I got a little sick that night, and by the middle of the night, I wasn't sure if I can get home. I thought I was going to have to go to the hospital. So anyways, I couldn't go to the party. I also had a tour of like one of the mosques there that had like the largest carpet in the world. Like I was going to go to a mosque. I was going to go to the Louis Vuitton hotel and everything. And I missed the whole gall dang thing. Oh man. But anyways, DJ in Dubai. Yeah. Sounds like fun. Celine, yeah. All right, Celine, yeah. Oh, I get it, Celine. I get it. See, I'm dumb. The threes are E's. I knew that, but yeah, you'd think it, right? Oh well, yeah. Well, I'm not a local, Celine, and but I've been to Dubai. I don't know, 5 or 6 times. I don't keep track of these things, but I like it. In many ways, it feels like home. But I've done the non-touristy bits too. But yeah, and that's the thing with the Palm. You're like, ugh. I mean, the Palm's nice, but then you get there and it's just crowded. And I'm like, oh, I hate this place. Right? And then when I stayed at the Burj Al Arab, Dude, I spent $7,000 a night, I think it was. $7,000 a night for a hotel. And I couldn't wait to see who I was going to meet. I really want, like, that was my big thing. I'm like, I don't know who spends $7,000 a night at a hotel, but I want to find out. I'm like, and I thought, like, I could hang out at the pool and just start. I'm one of these guys where if I want to start a conversation, obviously I can, right? So I'm like, I'm going to meet people. So I'll hang out by the pool, I'll hang out by the bar, I'll hang out at all these places. And I'm like, I'm going to find out who drops $7,000 a night. No, the Burj Al Arab. And I had fun, don't get me wrong, but the only people I met were Russian mafia. Yeah. And there was a fair bit of Russian hookers, to put it mildly. But other than that, I didn't get to meet like cool, interesting people. So it was a big kind of big letdown. And you're like, huh. Yeah, Dubai is a complicated place. Oi! So anyways. All right, so gold's going to give me another chance. Yeah, gold. So we'll see if I can pick it up on the 21. I'm actually hoping it fills the gap, but we'll see. But Caitlin, I've been once or twice to like the old part of Dubai, you know, the old town, where you cross the river, and it's 90% Indian. You know, it's where all the workers are, and they're you know, and all that kind of stuff. And you know, I went to like a Syrian restaurant once, and let's just call it humble. It's the humble part of Dubai. Oh, hang on. I got an ad. I'll show you the hotel. Burj Khalifa, no. Here it is. Burj Al Arab. Yeah. It's nice. So my funny story, oh, I can't pause it there. I have a funny story. So my room was actually on the other side, but I have a lot of funny stories about this place. But yeah, I didn't do the outdoor pool. I can't remember, but I did the indoor pool, which was pretty cool. Yeah, so you know it. I actually like the place across, right over here to the right. I actually like that place. Oh, there it is. This place in the front here is actually pretty cool at night. Oh man, it's beautiful. Okay. And I often stay at like the Ritz-Carlton in the Marina, if you know that area. There's a cigar bar across the street, and of course the Ritz-Carlton will serve alcohol, so I can have a scotch at the Ritz-Carlton, run across the street, sit and have a cigar. Okay. Well, there's a hotel too there, isn't there? You're saying it's a souk. I've had dinner there. I've had lunch there. I've had coffee there. But I just assumed it was a hotel as well. No burned, no Russian hookers for me. Yeah. You guys haven't seen the video? I might have it on YouTube somewhere. Probably FX Boot Camp. It's actually cool. It's kind of funny. I put me FX Stream. I want FX Boot Camp. Where is it? Community. I might have posted it under community. How do I search my own channel? Oh, there it is. I had to expand. Do I have it on this channel? No, I guess not. Huh. Oops. Wrong one. Anyways, whatever. Yeah, it was nice. I got some killer stories, though, if you buy me a drink. If it's not on the FX Bootcamp channel, where would it be? Well, I don't know where it would be. There's a cool video somewhere. It really is neat, but it's so long ago now. Yeah, anyways. Oh, WTI. All right. Well, I guess the world is waking up. And I got to do... Daddy's got to go to work. So I'll catch you later. If you're in my day trading group, I saw you last night. I'll see you tonight. Because tonight, so take care of yourself, everybody. Trade safe. I hope everything is right as rain. I hope we get peace in the Middle East. I hope we put an end to all of this. But I have my doubts. So I got to trade what I planned on trading, and yet I also have to trade reality, and so the next 24 hours could be tricky. But nonetheless, I'm glad that we can do this together and that we're part of this wonderful community we call Forex.Today. If you haven't subscribed, please do that. Also, could you click the thumbs up button? I mean, I thought I gave you some pretty hardcore analysis, right? Like, I'm teaching you legitimate stuff. Hopefully a level or two or three higher than all the other YouTube gurus that have probably don't have any real education, probably don't have 20 years of experience, right? Don't have master's degrees, probably have never been licensed or registered, probably have never traded $1 billion in a month. So since I've done all those things, I tried to bring the real world to you. And I hope you appreciate that. I love doing it. But I hope you say, dang, boy, that was great. Cool. So I'll see you when I see you. Have a wonderful